Welcome to Illuminati Silver. We tell you the truth about silver. Today is Tuesday, the 11th of August 2020. And today we're going to talk about the pullback in gold and silver prices we were expecting to occur late last week. But it has waited until today to happen. But meanwhile, yesterday we produced a video entitled, Will the Nasdaq lead the next stock market collapse? And on Sunday a video entitled $50 Silver? Yes, but not in 2020. Okay, today we've seen quite a significant fall in both gold and silver prices. Silver is down currently $3.49 at $25.53, having actually been as low as $24.80. And gold is down $98.48 at $1,927, again having been as low as $1,911. Now these are the sort of levels we were expecting a pullback to occur last week. But as all regular listeners will know, that those prices actually rose on Thursday, edged back a little Friday, but today has seen quite a significant fall. Now we're not going to crow about this, as there's plenty of time for a recovery. But it is worth noting that during the last few days, or if not the last week, 33 of our listeners, 27 of which were brand new appearances on our site, stated we did not know what we were talking about. Gold was going to quickly jump to $3,000 and then $5,000 before the year is out, and quite a few have bet us that $50 silver will be achieved this month. Yes, this month. I wonder how confident they are now. Admittedly, there's still 3 weeks to go. Now, before we take a closer look at this correction, let's take a peek at other market data. We're producing this podcast at 2020 GMT +1, so US markets are not currently closed. But by the time this actually hits the YouTube channel, they probably will be. So prices may have changed slightly. That said, we can see that the Dow Jones is up 168 points at 27,959. The S&P 500 is up 8 points at 3,368. The Nasdaq is down 71 points at 10,896. Please note our Nasdaq video yesterday to glean a greater understanding why this may be happening. European markets, which have now closed, performed stronger and were generally up an average of 2%. Interestingly, the dollar index was down much of today but has recovered somewhat and is marginally up 0.08 at 93.66. The gold to silver ratio now stands at a more, in our view, respectable 75.5 to 1. Now, economic news in the US showed more job openings for June than in May, and the producer price index, which we will refer to as the PPI, for July was a positive 0.6% compared with June's minus 0.2%. So what happened today to give us a rather significant price correction in gold and silver? Well, US 10-year yields actually shot higher by some 6 basis points, following this much larger than expected US PPI index. The PPI increased by 0.6%, as we mentioned a moment ago, due primarily, but not exclusively, to a surge in gasoline, and was the largest gain since October 2018. This was against expectations of a rise of just 0.3%, so the rise was twice that expected. Now, gold having fallen below a major support level at just above $2,000, or what was the 10-day moving average, means that now this becomes resistance, and ultimate support is now calculated at the 50-day moving average of 1825, with other support levels around the 1954 and 1922 price ranges in between. Both short-term and medium-term momentum has turned negative, and the fast stochastic has indicated a sell signal. That's technically speaking. Silver markets also broke down today, as clearly the market generally felt its position was overbought. Now, we warned this could happen because a large chunk of the price rise was the result of paper trading, and quite a few traders actually got burned today. Some will argue it's now moving out of weak hands into stronger hands. We shall wait and see. A number of traders are putting its fall down to the news announcement earlier that Russia has sanctioned a vaccine for COVID-19. And yes, this will have had an impact, but frankly, its price had risen too far too fast. And to be fair, could have even had an additional day to go up to push it just above $30. That was potentially expected, but it was not to be. We stated over the weekend that the bull market for gold and silver is in, and that 2020, or the decade of the 2020s, particularly moving towards the middle, will be the decade for precious metal prices. And if you can acquire silver, preferably around the $23 level, but admittedly between 23 and 25, spot price that is, and you take a 12 to 18 month view, you're very unlikely to be disappointed. And we're very close to that bracket. Now technically, silver has support at the 20 EMA of $24.55 and resistance now at $29.50, and could quite easily oscillate between these figures for a couple of days. Now, before we sort of conclude, let's just take a brief updated report, literally published within the last half hour, by Bloomberg. Bloomberg article, dated August 11th, 2020, 8:41 p.m. GMT +1. Headline, Gold heads for biggest drop in 7 years on rising US yields. The rally that pushed gold to record heights above $2,000 an ounce has come to an abrupt halt, with the haven metal heading for the biggest drop in 7 years after bond yields spiked higher. Treasuries and European bond yields climbed, cutting into the negative real rates that had supported the metal. The 10-year Treasury yield jumped the most since June, ahead of an expected flood of government and corporate debt issuance. US producer prices increased faster than expected. Today, real rates clearly moved higher, and that's clearly what moved gold lower. Michael Widmer, head of metals research at Bank of America Merrill Lynch, said by phone from London. You had stronger PPI data out, and I think when that data came out, the market had another look at rates and expectations. Exchange-traded fund investors also took a breather, seeing back-to-back outflows for the first time since June. On Friday, State Street Corp's SPDR Gold shares, the largest go-back ETF, saw its biggest outflow since March. Meanwhile, a Bloomberg intelligence gauge of senior gold miners dropped the most intraday since March, down as much as 6.3%. Stocks rallied as investors in risk assets took some comfort from the US president's comment on potential tax cuts, strong Chinese economic data, and falling hospitalizations in California and New York. Adding to positive market sentiment is a COVID-19 vaccine that Russian President Vladimir Putin said the country has cleared for use, and it hopes to begin mass inoculations soon. Globally, coronavirus infections breached 20 million cases, after doubling in 6 weeks. It took 6 months to reach 10 million. Spot gold fell 5.5%, $1,915 an ounce at 2:46 p.m. in New York, heading for the biggest drop since April 2013. Earlier, the price broke below the $1,921 level that had stood as the record for almost 9 years. Futures for December delivery slid 4.6% to settle at 1,946 on the COMEX in New York, the largest decline for a most active contract since mid-March. It's quite abrupt and brutal, but the price increase before was even more abrupt and brutal, Carsten Fritz, a commodity analyst at Commerzbank AG, said by phone. The trigger could be the sharp rise in bond yields, which caused some profit-taking, and then that cascaded. When people start to take profits, more will follow, and so we see this acceleration of price declines today. Spot silver dropped as much as 15% at $24.75 and was heading for the biggest decline since October 2008. Wither gold. I think the underlying fundamental positive reasons for gold haven't gone away, Tom Fitzpatrick, a Citigroup Inc. technical strategist, said by phone. Once the momentum in this lags, we'll probably consolidate for a while, but we still think we might find ourselves back up at 2,400 by the end of the year. Bank of America's Widmer says the gold rally has only hit a pause and reiterated the bank's $3,000 an ounce 18-month target. Financial repression is not gone, and I think dollar debasement is not gone either, Widmer said. Implicitly and explicitly, central banks are backstopping governments at the moment, and I think that's really the bullish firmness behind that $3,000 per ounce call. So the immediate short term looks a little negative, but there is still confidence that these prices will recover by the year end and rise above even recent heights. We would not disagree with that, but reiterate our prediction that $50 silver in 2020 will not happen, unless, as we've mentioned numerous times, a major black swan event occurs. Though indeed it may rise above $30. And 3,000 gold, whilst a possibility, is more likely to be at least $500 below that figure by year end. Of course, 2021 and 22 may be very different propositions. Let's wait and see. There's only 4.5 months to go before the end of 2020. Meanwhile, do share your thoughts and let us know if you're using this pullback to stock up further. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.